Hi dear traders, it seems that inflation in the US is picking up again. Thus, the core personal consumption expenditure price index PCE for August, which was published on Friday, came out much higher than expected. This caused worries among investors and increased their expectations of more aggressive steps by the US Federal Reserve. Let's discuss how this event influenced foreign exchange and commodities markets. The US dollar closed last week with a decline. The US dollar index, which demonstrates its value against a basket of 6 major currencies, is holding near a 20-year high, posting gains for the fourth time in a row. The greenback is strengthening in anticipation of more aggressive actions by the Fed, which is trying to slow down the pace of consumer price growth. Several Fed officials already expressed the need for more rate hikes even despite the threat of a recession. The central bank plans to bring the rate to 4.6% next year. However, the US currency closed last week a bit lower, which may be the result of profit taking when investors close buy positions at the end of the month and quarter. Meanwhile, the euro managed to win back some losses against the dollar after dropping to 20-year low of 0.95. Investors are now convinced that the European Central Bank is determined to fight inflation. The preliminary data on inflation for the euro area published on Friday suggests that consumer prices accelerated to 10% year-on-year. This is another record reading and a signal for the European regulator to continue the rate hike of 5 basis points. The British pound was in the spotlight last week. The pound-dollar pair was extremely volatile amid news coming from the UK monetary authorities. The fluctuation range of the quote was almost 1,000 pips. Markets in the UK plunged after the government announced changes to the tax system. The pound closely approached the parity level of 1.03, its lowest value on record. Against this backdrop, the UK regulator had to step in and announce the resumption of an unlimited quantitative easing program. The Bank of Japan also had to intervene in the market. Still, the yen is trading at its lowest level in the past 24 years. Unlike its Western counterparts, the Japanese central bank does not rush to raise interest rates as it's trying to support the recovery of the local economy. Besides, amid the current economic turmoil, more and more investors prefer to stay with the US dollar, not the yen, even though it's traditionally considered to have more protective properties thanks to the stability of the central bank. Another safe haven asset, gold, remained stable last week and was trading at $1,660 per troy ounce. Yet this might be a short-term trend observed at the end of the month and quarter. The quote of the precious metal is expected to resume its decline in the near term amid intensified hawkish rhetoric of central banks. Higher interest rates make it more expensive to hold gold, and its attractiveness among investors inevitably decreases. In these turbulent times, market participants still favor the US dollar over gold as a store of value thanks to the resilience of the US economy compared to others. In the commodities market, Brent crude was traded at $88 per barrel last week. Oil lost 20% this quarter. The commodity is losing ground due to the threat of a global recession that will notably decrease crude consumption. On October 5, OPEC Plus is set to hold a face-to-face meeting in Vienna for the first time since 2020. Oil traders assume that the cartel may decline to cut oil production in November. This step may bring more optimism to the energy market. These are the trends of the last trading week, and now new week and new events are ahead. Don't miss our daily news reports to learn the latest market news. Stay tuned.